Hello everyone, very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at a candle formation named as short line candle. Now there is a pattern in which we have very minor difference between the opening and the closing price of the candle, and as a result of that a small body candle is formed. It doesn't matter whether its shadow is long or short on both the sides, that is not relevant. The only requirement is that its real body should be very small, meaning its opening and closing price should have closed nearly around the same levels. So that indicates the indecisiveness in the market. There is no strong momentum on either side, and even if the momentum is coming in, it is being balanced out in the same candle period. So that is the assessment which we can draw simply by looking at the formation. But then the things are not really as simple as it looks, as we always have to provide the context and see what is the larger picture, and then if we trade while keeping everything in mind, we can indeed utilize this indecisive momentum to work in our favor while giving us the idea, or you can say even anticipation of the possible move which is likely to happen after the consolidation, after the indecisive phase, and that is what which we want to be able to figure out. So let us now head to the JForex4, the newly released trading platform from the Dukascopy Bank SA. This is the chart of the Euro USD with the each candle period defined at hourly. Here we are seeing significant decline in the euro even after the hike of interest rate by the ECB, because things were mostly factored in earlier moves, and now we are seeing profit booking sort of moves happening after the real thing has materialized as per the expectations of the market. The markets were expecting a rate hike, they got it, but still we are seeing the euro trading with the negative bias, and it is likely to remain so for next couple of hours. Now, if we have to go for the price moves and see how we can take advantage of the situation, we always have to look for the price formation in context, and for that we can utilize this price formation of the short line candle. So all you have to do is type in the short line candle, and here you get it. Now this particular formation encompasses various other candle patterns like doji. Even you can include the hammer, the inverted hammer and the hammer pattern in this gives on doji, or even other doji styles. Doji candles are included under the short line candle, because in most of these cases the actual body of the candle is really small, and if that is the case, it doesn't really matter, as I said, the length of the shadow. So we simply look at the difference happening, and in line with the earlier price trajectory, if it is not moving much, if it is not showing momentum, strong momentum on either side, we term it as a short line candle. Now, as I said, where it is happening is very important. Now here, if we consider this particular sequence of the formation of the short line candle, you will notice that it materialized after this phenomenal move, the substantial move from the 1.08 levels towards 1.09 levels, and on the higher levels we saw the formation of multiple short line candles. So it was simply giving you the idea of the indecisiveness of the market participants on these higher levels. So this was a signal that the prior move might now be coming to an end, and for next couple of hours the things are likely to remain sideways and trade with the upper price band as a resistance. But this correction also didn't deepen much. It was not a correction of sharp move. Again, even in this correction, we saw the formation of multiple short body candles, signifying that there was lack of negative momentum. And if we combine the lack of selling with the prior momentum of the buy, you get the idea that the next move is much more likely to happen in this same direction of the buyers, because there were buyers coming in earlier and there is lack of sellers. And if the momentum is going to be simply on the basis of inertia, then the natural course of action for the underlying instrument is going to be to rise again. And that is what we saw in this case. And on these higher levels, again, we saw this formation of the short line candle. And as expected, it told us for next couple of hours the things are likely to remain in the consolidation phase, and that is what happened. And again, the resumption of the prior move, the upside move, happened. Again, we saw the formation of the short line candles on these higher levels, but it didn't really dip much. Again, this correction candle was a short line candle, then move on the higher side, then again multiple short line candles, and finally the decline came in this time around. So now this is an interesting phenomena. In earlier cases, we saw the price rise followed by short line candle formation, cluster of short line candles, then the move in the same direction. But this time around, we saw the price move on the higher side, then this short line candle formation, consolidation, and then the price reverse. And I think we could have paid attention to the next price formation after the short line candle. If it is not happening in direction of the prior trade, then we should not really go for the initiation of the buy trade, as the things are likely to turn against the existing trend. And that is what we saw in this case with the substantial move, putting the Euro USD closer to where it started in yesterday's session. So we have to combine these prior moves, then the short line candle cluster, and the subsequent move on which side the momentum is developing after this consolidation with the short line candle, to figure out the opportunities. And if we do all these three things, we are much more likely to get the move right, the momentum right, and of course the account is going to grow with this price formation, providing us multiple opportunities to profit. When the things were bearish for the euro, we again saw this cluster of short line candle forming. Now in this case, this candle looks like a hammer. This is a full body candle, and in this case it looks like inverted hammer. So we have all these kinds of doji candles taking shape, but as I said, it doesn't really matter. The shadow is never relevant when we are simply looking at a short line candle, which pays attention to the difference between the opening and closing price, and that is the most important criteria. And once we get the initial momentum right and the consolidation phase, if we combine that with the subsequent move, when the range increases, we are much more likely to get the trade right, get the momentum right. And here also again, as expected, the price dipped, but not much. Next couple of hours, the momentum remained bearish, but again, the momentum turned later on, and we saw this sharp move from the levels of 1.086 towards 1.09. So you can say that this particular price structure involves three elements: the first move, then the second phase of consolidation with multiple short line candles, and after that consolidation, we have to pay attention to the next price move in which the range increases, and if we get everything in line, we are likely to get the trade right. The same thing is becoming visible multiple times. So this is the feature of this short line candle, which helps us figure out the consolidation quite easily, because many times if we are trading with the expectation of the markets trending, but again and again, if the consolidation phase is only there, we tend to lose money. But with this price formation, you will be immediately notified of when the phase is in consolidation, and if the price range increases, then we will see the break of the short line candle cluster. That can be used as a confirmation sign, the signal now that the momentum is picking up, and we better adopt to the changing circumstances and give up on our earlier anticipation of the consolidation. Now let us see what we can do in terms of editing the short line candle. We can't really do anything with the input as there is a single candle formation, so input remains as it is. Output, you can go for the color combination of your choice with the trend up and trend down being defined with different color combinations. So you can go for the styling of the bracket, or you can shade all of the candle in the color of your choice. You can even go for the higher or lower transparency factor to make candle look like the way you want it to. Now here we are applying the shades, transparent shades of this bright blue color, the light blue color, and as a result of that, the red candle is looking like pink candle, and the greenish candle is giving way to look like blue greenish. It is not exactly greenish. So this is how you can customize the candle formation as per your taste, as per your aesthetics. Recalculate on new candle only. This is not going to cast much of an impact, as we will have the single candle formation always recalculated on new candle. Highlight the time period zone. This being a single candle formation is also not really an important customization factor. This is important though, the show indicator on all periods, because if you want the indicator to be available on all the candle periods, you can have it available on multiple time frames with these 5 minutes and hourly candle periods defined. So if we change the candle period to say, for example, 5 minutes, we will have the price structure in which we are getting these candles recognized as and when this form on the chart. But if I change to 10 minutes or any other candle period, I won't see any short line candle being recognized on the chart, because we have defined it only for hourly and 5 minutes. And we can add multiple indicators on different time frames like this, while making sure that the chart doesn't really look too cluttered, for easiness of trading, of reading the data from multiple perspectives. So that is the whole purpose of providing this customization option. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind that for further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. And do let me know how this price formation, the pattern recognition is working out for you, and if it is helpful or not. So I would be looking forward to the feedback and what we can do about that. Thank you all for joining in. Have a fabulous day ahead, a profitable day ahead. See you next time around. Goodbye.